Canada and Japan just unlocked a trade relationship worth nearly $40 billion annually. And they did it without America at the table. Over 650 representatives from more than 440 Canadian organizations flew into Tokyo. It was the single biggest trade mission Canada had ever launched in its entire national history. They were not there to talk. They were there to sign energy deals, technology partnerships, defense agreements, food supply chains, and every single structure was designed to deepen ties that do not run through Washington. This is not politics. This is money moving, and it is moving fast. If you want to understand where global trade power is actually shifting, stay until the end. And if you are new here, hit subscribe. This is the economy code where the real numbers live. The US-Canada trade relationship, standing at roughly $700 billion annually, is one of the world's largest economic partnerships. For decades, Canada built its entire economic identity around that single corridor. Nearly 3/4 of everything Canada exported went directly south into American markets. That dependency was not just economic, it was structural, deeply wired into supply chains, energy pipelines, automotive factories, and agricultural contracts. But something started cracking in 2025, and it cracked loudly. In March 2025, President Trump imposed 25% tariffs on most Canadian imports, citing a national emergency related to illicit fentanyl at the border. Canada did not wait quietly. Canada responded with its own retaliatory tariffs on $30 billion worth of U.S. goods, which escalated to $155 billion after just 3 weeks. This was not a minor trade disagreement. This was the most significant rupture in North American economic history since NAFTA was first negotiated. Two neighbors, deeply intertwined for over 30 years, suddenly pointing economic weapons at each other. By October 2025, President Trump had publicly stated that trade talks with Canada were terminated. That single word, terminated, landed in Ottawa like a financial earthquake. Canadian policymakers, business leaders, and economists all absorbed the same uncomfortable reality simultaneously. Relying on one trading partner for nearly 75% of your exports is not a trade strategy. It is a vulnerability. And Canada responded the way smart economies always respond to vulnerability. It started looking for other doors. On March 6, 2026, Canadian Prime Minister Mark Carney met with Japanese Prime Minister Takaichi Sanae in Tokyo, where the two leaders signed a new comprehensive strategic partnership covering defense, economic security, energy, technology, and trade ties. The scope of that agreement was not symbolic. It was a full-spectrum economic realignment covering some of the most strategically sensitive sectors on the planet. Japan is the world's fourth largest national economy, with a GDP of $6.2 trillion as of 2025. And the FDI stock from Japan into Canada is valued at $54.8 billion, making Japan Canada's largest source of foreign direct investment from the entire Indo-Pacific region. These are not small numbers. Japan is not a consolation prize for losing American goodwill. Japan is one of the most sophisticated, capital-rich, technologically advanced economies on Earth. And it had been quietly building its relationship with Canada for years, waiting for exactly the right moment to step forward. In 2025, two-way merchandise trade between Canada and Japan reached $35.6 billion. That figure is expected to grow significantly under the new strategic partnership framework. The Team Canada trade mission model that preceded the March 2026 signing had already proven its value. The earlier Team Canada trade mission to Japan generated at least 70 new contracts with an overall value estimated at close to $30 million CAD. And that was just a preview of what a full-scale strategic alignment could deliver. Now consider what this looks like from Japan's side of the table. Japan has been one of the world's most energy insecure nations for decades. It imports nearly all of its oil and gas. After the Fukushima disaster in 2011, it shut down most of its nuclear capacity, creating a structural energy gap that it has been trying to fill ever since. Russia was once a supplier. That door is now closed. The Middle East remains volatile. And the United States, while energy-rich, is a complicated partner with its own domestic political pressures. Canada, on the other hand, sits on enormous reserves of liquefied natural gas, clean energy capacity, critical minerals, and agricultural surplus. Prime Minister Carney stood in Tokyo and told Japanese leadership that Canada is in a position to double its LNG exports by the end of this decade, and then double them again by the end of the decade after that. Japan's Prime Minister Takaichi described Canada's LNG expansion as having great significance for Japan's energy security. That is diplomatic language for, we need this, and we need it badly. This is where the story stops being about politics and starts being about pure economic gravity. When a $6.2 trillion economy tells a resource-rich nation it needs what they are selling, and backs that with a comprehensive strategic partnership, money follows. Investment follows. Infrastructure follows. decades of supply chain realignment follow. The roadmap signed during Carney's Tokyo visit covered energy, defense, artificial intelligence, quantum computing, and clean technology, sectors that will define global economic competition for the next half-century. These are not the kinds of agreements you sign for optics. These are foundational decisions, the kind that get studied in economics textbooks 20 years from now. And Washington was not in the room. So what exactly was being traded inside those Tokyo boardrooms? The answer is bigger and more strategically significant than most people realize. The Canada-Japan Joint Economic Committee, built on 50 years of bilateral cooperation, is now being modernized to capitalize on emerging opportunities in semiconductors, batteries, AI, clean energy, critical minerals, and resilient supply chains. Read that list slowly. Semiconductors, batteries, artificial intelligence, clean energy, critical minerals. These are not just trade categories. These are the 5 pillars of 21st century economic dominance. Every country on Earth is fighting for position in exactly these sectors right now, and Canada just locked in a privileged partnership with the 4th largest economy on the planet across all 5 of them simultaneously. The groundwork for this partnership was already being laid quietly. A Security of Information Agreement signed in July 2025 and a Defense Equipment and Technology Transfer Agreement signed in January 2026 had already created the institutional channels for military coordination and information sharing between the 2 countries. These agreements do not make headlines, they rarely do, but they are the kind of infrastructure that makes billion-dollar commercial deals possible, because when governments trust each other at the security level, business follows. On the defense side, both countries announced 3 bilateral memorandums of cooperation covering international emergency response, joint Coast Guard exercises, and action against illegal fishing in the North Pacific. That last point matters more than it sounds. The North Pacific is a contested maritime space where Chinese and Russian vessels operate regularly. Canada and Japan coordinating Coast Guard activity. There is a direct signal to Beijing and Moscow about where the new lines of economic and security influence are being drawn. Then there's the critical mineral story. And this is where the financial stakes become truly enormous. Under the G7 Critical Minerals Action Plan, launched during Canada's 2025 G7 presidency in Kananaskis, Ottawa pushed for standards-based markets, financing mechanisms, and diversified offtake agreements, and began advocating what officials described as a buyer's club model, designed to guarantee demand for non-Chinese suppliers. Japan backed this approach strongly because it aligns with Tokyo's economic security doctrine, stretching back over a decade. China's 2010 rare earth export restrictions, when Beijing temporarily cut off Japan's supply over a territorial dispute, permanently shaped how Japan thinks about resource dependency. Beijing's 2025 export restrictions on medium and heavy rare earths caused immediate supply shocks for Japanese manufacturers, and the new Canada-Japan frameworks are explicitly designed to build parallel supply chains in North America and allied nations to prevent future disruptions. This is not abstract policy. Japanese factories building electric vehicles, wind turbines, and defense systems were feeling real pain from Chinese supply restrictions. Canada, sitting on vast reserves of the exact minerals Japan desperately needs, was the logical answer. Both governments committed to strengthening support for upstream critical mineral resources, expanding midstream processing capacity, and fostering their respective battery value chains, with a shared commitment to oppose market-distorting measures and monopolistic policies on critical minerals. That phrase, monopolistic policies, is a direct reference to China. Both countries are saying the same thing without saying it directly. We are building a supply chain that China cannot hold hostage. Now think about the agricultural dimension of this relationship. Canada is now the #1 supplier of pork to Japan, a position earned through decades of investment in trade delegations and market access work. That did not happen by accident. It happened because Canadian agriculture executives showed up, built relationships, met quality standards, and delivered reliability. Beyond pork, Canada overtook the United States to become the #1 supplier of wheat to Japan, and overall supplies approximately 10% of Japan's total caloric intake. 10% of the caloric intake of a nation of 125 million people. That is not a trade statistic. That is food security infrastructure. And here's where the U.S. tariff situation feeds directly back into this story. When Washington imposed 25% tariffs on Canadian goods in early 2025, it did not just damage Canadian exporters. It damaged the psychological foundation of a relationship that had been the bedrock of Canadian economic planning for 3 decades. Canadian farmers, manufacturers, and technology companies looked at that tariff and asked the same question. What happens next time? What happens when political winds shift again? What happens when USMCA comes up for review in July 2026 and Washington decides to rewrite the rules? Japan's Ministry of Economy, Trade and Industry has allocated over $10 billion in its budget for AI and semiconductor industrial infrastructure. And the Team Canada trade mission, scheduled for June 23rd to 26, 2026, is specifically targeting defense and security, aerospace, advanced manufacturing, and artificial intelligence as its priority sectors. Canadian AI companies, which have quietly built some of the world's most sophisticated machine learning capabilities, now have a direct pipeline into a $10 billion Japanese government procurement cycle. That is not a small opportunity. For Canadian technology firms, that pipeline could be transformational. The autonomous vehicle market in Japan alone is projected to reach over $18 billion by 2033, while the drone and unmanned aerial system market is expected to grow significantly as well, creating substantial opportunities for Canadian AI firms whose technologies have both commercial and defense applications. Canada's AI ecosystem, anchored in cities like Toronto, Montreal, and Edmonton, has been producing world-class talent and technology for years. Until recently, most of that talent ended up serving American tech companies. The Japan partnership offers a different path, one where Canadian innovation serves Canadian economic interests directly. This is the deeper shift that is easy to miss in the headline numbers. The question that every serious economist should be asking right now is this: is what Canada is doing with Japan a temporary diplomatic detour, or is it something more permanent? Prime Minister Mark Carney outlined Canada's diagnosis most clearly in his January 2026 World Economic Forum address, arguing that the rules-based international order of the post-Cold War era has ruptured as great powers increasingly weaponize economic integration by leveraging the vulnerabilities it creates. That is not soft rhetoric. Coming from the former governor of the Bank of England and the Bank of Canada, those are the words of a man who has spent decades managing sovereign risk. He knows exactly what a structural vulnerability looks like, and he is telling the world that Canada's over-reliance on the United States is precisely that. Diversifying partnerships, particularly in the Indo-Pacific, is therefore both an economic necessity and a strategic hedge, an effort to build greater resilience and policy flexibility, not a project aimed at replacing the United States. That nuance matters enormously. Canada is not burning bridges. It is building new ones. The Japan partnership is not an act of rebellion. It is an act of financial self-preservation by a country that watched its closest ally impose 25% tariffs overnight, and then tell them the conversation was terminated. Canada's first-ever defense industrial strategy, announced in early 2026, makes clear that Canada must diversify beyond an overwhelming reliance on the United States, with partnerships, exports, and supply chains in the Indo-Pacific as three areas requiring deeper focus. When a country publishes its first-ever defense industrial strategy, and the central message is to reduce American dependency, that is a watershed moment. It signals that the diversification away from Washington is now official policy, not just economic preference, but national security doctrine. Now zoom out and look at the full picture of what Carney accomplished in 10 days. The Tokyo stop closed Carney's 10-day Indo-Pacific tour, which had previously included India and Australia, with Canada securing more than $5 billion in commercial agreements in India and up to $10 billion in investment commitments in Australia. That is a single 10-day trip generating potentially $15 billion or more in commitments across 3 Indo-Pacific nations. No American officials were involved. No Washington approval was sought. Canada moved independently, strategically, and at speed. The two governments formally launched negotiations toward a comprehensive economic partnership agreement, setting an ambitious target of concluding a trade deal by the end of 2026, ideally in time for the December G20 summit, a full bilateral trade agreement between Canada and India, the world's most populous country and a rapidly growing economy, would represent one of the most significant trade architecture shifts Canada has made in a generation. Combined with the Japan strategic partnership, it would give Canada diversified anchors in the two most consequential Asian economies of the coming decades. Canada and Japan are building on 50 years of economic cooperation, now being elevated to capitalize on emerging opportunities in semiconductors, batteries, AI, clean energy, critical minerals, and resilient supply chains. 50 years of relationship capital, now being deployed at scale in sectors that will define which nations hold economic leverage for the next half-century. That foundation did not appear overnight. It was built methodically, deal by deal, relationship by relationship, and it is now paying strategic dividends exactly when Canada needs them most. Here is the broader financial reality that ties all of this together. As Prime Minister Carney emphasizes, trade diversification is not only an economic objective. It underpins strategic autonomy and the ability of middle powers to act without fear of retaliation. That phrase, without fear of retaliation, is the entire game. When 75% of your exports go to one buyer, that buyer has unlimited leverage over you. They can impose tariffs, threaten to terminate talks, or rewrite trade rules, and your economy bleeds regardless of whether you are legally right or diplomatically justified. Canada experienced exactly that reality in 2025. The Japan pivot is the direct financial response. The real test now is implementation. Agreements signed during high-level visits must translate into concrete outcomes: market access, investment flows, joint projects, and sustained institutional cooperation. That is the honest assessment. The strategic partnership framework is real. The economic logic is compelling. The political will is clearly present. But frameworks on paper must become factories: pipelines, shipping contracts, and technology agreements on the ground. Canada has historically struggled with follow-through in the Indo-Pacific, and both Canadian businesses and Japanese investors will be watching execution closely. Japanese subsidiaries and affiliate companies already operating in Canada employ thousands of Canadians and support numerous communities. And 70% of cars manufactured in Canada are made by Japanese companies. Most Canadians do not know that statistic. Most Americans do not either. The Japan-Canada economic relationship was already deeply embedded. Long before the March 2026 strategic partnership was signed, the mission to Tokyo was not building something from scratch. It was accelerating something that had been growing quietly for decades and redirecting it with deliberate, strategic intent. The world is being restructured. Supply chains are being rewired. Energy corridors are being redrawn. And the countries that move fastest, us, that identify their vulnerabilities, build new partnerships, and execute with discipline, will be the ones that hold economic leverage in 2030 and beyond. Canada flew its biggest trade mission to Japan. America was not invited. That is not an accident of diplomacy. That is the sound of a $2 trillion economy deciding it can no longer afford to have just one friend. The question for every investor, every business owner, and every person watching global trade shift in real time is simple. Are you positioned for the world that is being built, or the one that already ended? If this analysis opened your eyes to something the mainstream financial media is not covering, hit subscribe to The Economy, code, and drop a comment below. Tell us which sector of the Canada-Japan partnership you think will generate the biggest returns over the next decade. The answers might surprise you.